You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fun little network upon which we are all engaged right now. If you like what you hear, not just on this show, but on the network, make sure you leave those reviews, those comments out there so other folks can continue to discover the network in these crazy, trying, troubled times out there. And, of course, keep those questions coming. We do love to hear from you guys most of the time. I'm going to say 99.9% of the time. So keep those coming. We do love to hear from you. If you want to join us live every Friday, noon Central, 1 p.m. Eastern. Remember, it's back to the old time again, noon Central. It's a good time to view some volatility, we think. So join us there via the Mixlr chat if you are so inclined, or after the fact. We don't judge. As long as you get the show, we won't hold it against you. Let's see who's joining me on the old program today. First, let's go out to the MIAX hot seat, where we are joined once again by Mr. Tom JARCK, the volatility product specialist over there in MIAX land. Tom, welcome back to the program.
Thank you, Mark. Glad to be back on. Just, getting settled into the fall here. Kids are back at school and looking forward to a good show with you today.
All right. And also joining us on the old program today, he is the rockingest of lobsters, Mr. Andrew Giovinazzi from OptionPit.com by way of Carmen Line Capital. Mr. G, welcome back to the program, sir.
I'm trying to start the show out with no umbrage. So far, it's going okay. I'm in an okay mood. I'm in an okay mood today, Mark.
No umbrage. Well, that's all we can hope for from you, sir. No umbrage is our goal here on the program. And I do believe we are also joined, doing double duty on the MIAX hot seat. Let's see if the magic of technology is smiling upon us for our guest here, Mr. Luke RAHBARI, the CEO at Equity Armor Investments. Luke, can you hear me? Are you there, sir?
I can hear you, Mark. How are you?
All right, there he is. Third time's a charm over there. Welcome to Volatility Views, sir.
Thank you.
I know you were on our Options Bootcamp program a while ago, but this is obviously a different program with a little bit different audience here. Why don't you go ahead and give our audience a real quick overview of your background, particularly as it pertains to the volatility space, including I do believe you may have crossed paths with one of our fellow co-hosts here in the past.
Yeah. Tom and I used to work at the same firm. And, I was telling one of your assistants that was about 50 pounds ago for me. So it was way back when. I started trading the SEBO around 93. I went to an upstairs desk trading OTC, and our firm originally was one of the first firms to be making markets in the VIX options pit at the SEBO. And I used to market the VIX with the SEBO before it actually was a product in U.S., Canada, and VIX. There was a lot of interest in it from overseas customers, actually, believe it or not, before there was in the U.S. So that's basically my background. I've been around a while, and I've gotten a lot fatter.
That probably applies to just about everybody out there, I would think. But those are interesting early days of the volatility product suite. I remember talking to folks like Brodsky and others at the SEBO back in those days, and they were telling me they were planning to launch a volatility product. I remember laughing at first. As a former SPX guy, I remember saying to them, oh, great, you just created a perfect layoff pit for everyone in the SPX to lay off their vol risk, but who else is ever going to want to touch this thing with a 10-foot pole? And then fast forward a decade and change, and here we are. This whole volatility ecosystem has sprung up. Luke, back in the early days when they were first telling you about this, did you ever imagine that, you know, your proverbial grandma from Iowa would be trading VIX, sir?
You know, I was of two minds about it, because I didn't think that people would be able to understand the difference between VIX futures months and the VIX options. That was always one of my things, because, you know, you see a price of a stock and you think those are the options that are trading with it, but obviously that's not the case when you have a future product, right? It's the SEP options with the SEP futures. And for retail guys on their platform, it doesn't have every futures month on top of their correlating options. But actually, farmers and industrial guys and commodity traders understand futures a lot better. They're a lot more comfortable with it, especially for their hedging. So we always found that they took onto it a lot faster than normal equity guys, and definitely retail guys. But obviously that's changed too, and everyone's looking at it now.
Well, let's see what else is changing as we dive right on into our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we break down the week that was and indeed still is from a trading and trending and unusual activity and all sorts of perspectives. And the volatility landscape these days, just like the weather, if you don't like what you're seeing, just wait 5 minutes because you're going to get something different. We are seeing something a little bit different, talking about changing earlier. Start seeing something a little bit changing out there in the markets right now, and certainly in the vol space. Coming into showtime, markets were red, but ever so slightly. It wasn't a huge turn to the dark side. And vol was actually down quite a bit from our last show. Now the worm seemingly turning a little bit. Markets have ticked off a little bit. Dow's off about 0.75%. S&P off over 1%, about 1.2%. And NASDAQ threatening 2% to the dark side, off about 1.75%. And our old friends, the vol indices, spikes, and VIX getting back a little bit of their gusto. They were off over 2 points right before showtime, about 2.25 handles from last show. Now they've gotten about a point of that back. They're about 26.5 each coming into as of a few minutes ago. So that puts them down about 1.25 points each from last show, which is, again, this goes to show how capricious the vol space is for our prognostications. You could be right at the beginning of the show and wrong at the end, and vice versa. You could certainly be right throughout the week. That doesn't matter. All that matters is what's happening at the end of the show. Speaking of what was happening before the show, we saw a very interesting crossing of a Mason-Dixon line out there in the vol space. We were just talking on the show not too long ago, over the last week or two, about how the frame of reference for VVIX used to be about 75 on the dark side and about 120 on the upside. If you got beyond any of those, things are getting pretty crazy town. And then, you know, post-pandemic, VVIX has pretty much been north of 100, certainly north of 95 for the better part of this entire event. And now, looking at today, we just hit 99, just broke 100 today, for the first time since about February 20th, I believe. So pretty much since the pandemic really kicked into high gear. That's an interesting number. That's the kind of one where we saw that. We thought, maybe this is the sign of a little bit of the calm before the storm. Didn't last too long. VVIX now getting a little bit of its gusto back above the 100 level now, back up to 101. But for those of you who watch such things, a lot to unpack out there in the vol space. Let's go back around the horn, see what everyone else is watching, what's catching their eye, what's been lighting up their take in this week of volatility. Let's start back in the MIAX hot seat. Mr. Tom, sir, what's been catching your eye and lighting up your tape in the vol space this week, sir?
I guess a few things, but first I want to just respond to Luke. 50 pounds for you, probably, not to brag, but only about 10 pounds for me that I probably put on since we last actually met in person a while back. But what's been catching my eye? So, obviously today's, we're getting towards the lows. We broke that 50-day moving average. This week we've been dancing around it, and we're definitely, through. The unique thing has been, a few weeks back, it was all about, market up, spot up, skew up, convexity up, and it's just been the complete opposite on the move down here. The last, few sessions, with skew and convexity, definitely getting, coming off, as well as, vol just not performing like you would normally expect. And part of that is because, in my view, that some of the, the skew is, pretty elevated prior to all these moves. And then, it's just, I feel like, volume wise, it seems a little bit on the lighter side, just from some of the things I'm looking at. But, you look at the single stock world and things are moving around quite aggressively. So it's been, pretty decent. But I'll let some of the guys chime in, and we'll come back to some more things.
All right. I do believe we have some rare double duty going on here, in a little bit of a handoff going on in the option pit hot seat out there. But before he runs off to his kayaking paradise known as Maine, Mr. Rock Lobster, sir, what is catching your eye? What is lighting up your tape out there in the vol space this week?
I think the biggest thing, just convergence, like the crazy cash future number is starting to come in a little bit more, which is making VXX the craptastic performer of the week, just melting away slowly but surely. And the only other thing I'm looking at is tech. You know what? Apple's down, $30 from its top, or a little almost, which is a pretty good chunk of, that's like $120, right? Pre-split. So these stocks have given back quite a bit in tech world, and it doesn't look like they're quite done yet. The last legs have been kind of leaking out, and I think that's part of what the vol story is. So I will let Sebas continue if he's all bright and spanky clean and shiny after his NASDAQ interview.
I do believe, yes, we have a bit of a handoff going on here in the land of the pit as we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian. Mr. Mark, were you two-timing us with Mrs. Malandrino over there in NASDAQ land, sir?
I was. I
How dare you?
And Andrew was covering for me.
So what is catching your eye out there in the vol space these days, sir?
I got to second what Andrew just said. We have, the market is, you've got the NASDAQ stocks getting absolutely spanked. So what led is now leading on the low end. And you have money rotating out of the NDX, out of the mega caps and into things like financials, industrials, which have been pretty strong. I think if you look at the relative performance on the downside of like the Dow Jones Industrial Average to the NASDAQ and the SPX, you'll see where all the money is leaving the market, and it is in the mega caps. Apple, Amazon, Microsoft, Facebook, and the Google twins are taking us lower.
Yeah, hard to believe money can actually rotate out of those names. I didn't know that was possible anymore out there, given what we've seen over the past 6 months or so. Luke, obviously a lot to unpack here. It's been a somewhat unprecedented 6 months or so here in the market. Certainly yet another tumultuous week out there. We're rallying, we're selling off, we're mixed, we're all over the place. VVIX dropping below 100 for the first time. A lot to unpack. What has been on your radar from a vol perspective over there at Equity Armor over this past week, sir?
Yeah, it has been interesting, but I have to agree with what Tom said. So let's call it the SoftBank trade, right? The SoftBank trade was happening, the stocks were going up, call option volume was high, and volatility was going up at the same time. And now we're in a couple of weeks later, this week, we're in a position where stocks are coming down and volatility is coming down. And then, as Tom said, SKU's coming down as well. But I will say, it's all relative, right? It's all relative to what value or what level the VIX is at. And for us, a normalized VIX is around 16 to 22. You're looking at a much higher number, right? So it's hard to keep that. It's hard to keep that VIX level higher if the market doesn't make certain percentage moves. And the thing I always like to look at is at the money straddle in the front month. Let's just say in the SPX, look at the 33.15 or the 3300. Take the premium of the call and the premium of the put. That's what the market expects the SPX is going to move around, right? So keep an eye at that at the money straddle and see what volatility is doing. If you see the market not making those moves, but volatility staying bid, staying steady, or coming down, you can make some assumptions about where people think volatility is going, what's going to be happening. So that's the thing I'm looking at. But I have to agree with Tom. That week when the market was going up and vol was going up, usually when you see that, it follows up with a market drawdown. So keep an eye out.
There's a lot certainly to keep an eye on and unpack there. Let's roll on into some of the other products on our radar out there. Obviously, Spike's futures still halted. We're all waiting for the good word out there. We can start slinging those futures against the options out there. Coming into showtime today, we saw some interesting maneuvers out there in the old VIX futures curve. Again, remember last week that cash had a little bit of a mind of its own. It was a little bit juicy, so it was somewhat obscuring some of the traditional relationships out there between the future. Now that cash, at least right before the show, that may be changing any second now, but for now at least, the cash was a little bit calmer, and that was bringing back into stark relief what's going on out there in the rest of the curve. That OCK future, remember, Sep off the board here, OCK future, which has kind of been the focal point for a lot of this election hand-wringing. We've been watching that pretty much since January. What the hell is going on with that OCK future? Not quite as juicy as it once was, getting a little bit of that back this week, off about 1.25 points down to a little bit shy of 4-point premium to the cash now, about 3 3/4 points. Remember, that one was pretty rich not too long ago. So a little bit of erosion going on out there. That's probably a little bit inevitable as it slides closer to that front month there as well. Well, of course, it is the front month now, but as it slides closer to expiration. No future out there. Getting a little bit maybe of what used to be the OCK premium applying to NOV now. We got NOV at about not quite 5 points, about 4.6 points distance to the cash. That puts it about 1.6 points higher than it was last week. So getting a little bit of juice. Maybe some folks deciding there will be a little bit more election tumult, or really, in this case, post-election tumult here going forward. D's future at about 4, a little bit north of 4 points, about 4.3 points premium to the cash. And Jan, another big focal point for a lot of people looking at what's going on, what they're pricing in around Inauguration Day. Last week, it seemed like a lot of that had gone away, but of course, that was really due to the cash jumping all over the place. That now is looking at about close to 4 points, about 3.9 point premium to the cash. That's pretty much getting all that premium back that it looked like it lost. Remember, we cautioned you last week that the cash was obscuring a lot of that out there. So still about 4 points worth of juice going out to Jan, which is showing not at all a quiet Inauguration Day going on out there. You know, Luke, this has been a big talking point for us here on this show pretty much since the beginning of the year, and certainly since all the pandemic madness kicked off in February and March. What are your thoughts on what we're seeing out there in the VIX futures term structure, and in particular, what kind of juice they're pricing in around the election and indeed beyond, Luke?
Yeah, so the one nuance is the OCK VIX futures are really coming off the NOV S&P options, the calculation. That's the way we look at it. So if you were looking to get election protection, you're buying that OCK future, and that's why the OCK was spiking so hard a couple of weeks ago versus SEP, and it was kind of spiking like a fiscal cliff. You don't care what happens beforehand; it's that certain date that really matters to you. And obviously, that's come down some from a couple of weeks ago. But I think if you have an opinion on the election and you don't think that you're going to have a winner on election night and it's going to take a few weeks to sort stuff out, you got to start looking further. You got to go from the VIX OCK futures into NOV, right? And then you got to price in some of that with, depending on who wins, there's going to be a tax implication, and are people going to sell a lot out of their stocks before some new tax rule comes in, either for capital gains or corporate taxes, which would obviously bring price earning ratios down. So I think there's a lot of positioning for that, and I think it's going to kind of turn into people are going to lower their positions, getting closer to elections, and then they're going to a couple of weeks beforehand is when they're going to pile in, and I think that's when you're going to see some really big moves in the VIX and a lot of positioning. And I think for now they're just lowering the stock position, and then when that gets closer, they're really going to pile into the VIX. So a lot of this stuff isn't fundamental trading; it's positioning for changes in rules and an election that, could show a 2,000 point move in the Dow. And when Trump first got elected, I think I was on a plane, and overnight, was it a 900 point move?
Yeah, it was about 1,000 points in the Dow almost instantly. Yeah.
Yeah. So, could be bigger than that, but we'll see. Again, look at that at the money straddle. We'll see what the market is expecting. I think that there's going to be some positioning a couple of weeks beforehand, and volumes are going to spike really hard.
Does seem like the markets are positioning. We were talking about this earlier on some of our other shows, like the Option Block, positioning for maybe another October surprise in the works. Of course, in 2016, we saw that last-minute Comey announcement there. And I think that actually broke during Volatility Views, as I recall. And that certainly turned the worm from a vol perspective. You could argue for the election perspective as well. It seemed like the market kind of bracing for something like that as well, leading into the election. And, of course, post-election, you're right, all sorts of other impacts. And perhaps the fact that we don't know who the heck the winner is going to be. Market seemed like it's bracing for a lot of that as well. And I do recall that night very well. I believe I was doing a live election night show with our buddy here, the once and future Dr. Bix, Mr. Rhodes. And that's when he informed me that Trump had just won Ohio. And that's when I said, wow, this is really serious. And then, of course, that's when the futures, I think, began their march to the dark side. Maybe we'll have to repeat that this year, listeners. Let us know if you're interested in maybe a live election night special. It was pretty fun last time, not the least of which because there was a lot of stuff popping off. No sooner did he win Ohio than really all of it hit the fan. And it was certainly fascinating to watch. So maybe we'll do one of those again. Little live stream for you guys out there. Listen, let us know if you're interested. Mark, same question for you, sir. What is catching your eye out there in the ever-evolving, ever-head-scratching VIX futures term structure, sir?
I mean, VIX term structure has gone up and down and up and down. It's gone, yesterday it went from a pretty deep backwardation to a closing in a contango. And now we're right back to being, pretty flat. The October future is still trading at a pretty nice premium to the cash VIX, but it has flattened up against November, which is now trading at a premium, shockingly, to October. So we're starting to see November pick up some election risk. And why would November pick up election risk? Well, because if the election isn't settled right after the actual election, then volatility could be pretty high through the middle of November, which would hold up that November future. So we're seeing risk migrate from October into November and December, which is why things are the way they are. I actually kind of have liked the October-November spread for a while. And as I look at it, I actually think the December-November spread is interesting. And even more interesting is the December-January spread. I think that there is some money to be made being short December and long January.
Yeah, January, certainly. That's another one I've been fixating on for quite a while out there, just for a number of reasons, not the least of which the opportunities, but also just what that shows and potentially implies for the market post-election. Not exactly an easy, non-bumpy post-election road out there. Tom, same question for you, sir. What is catching your eye? What is lighting up your tape out there? It looks like, speaking of lighting up the tape right now, it seems like the sell-off is exacerbating. The Dow just crossed the off 1% mark now. S&P off about 1.5%, and the NASDAQ off over 2% now, about 2.1%. So a little bit more red on the screen as we're moving into the second half of the show here. Tom, what is catching your eye on the vol surface this week, sir?
So based on those moves you just said, maybe we'll see a little pickup in vol today. But
yeah, I could use one of those for my crystal ball prediction. I'm not going to lie.
I didn't look what your prediction was, but one of the things I like to look at too is just all the. I mean, in the universe of options that are listed now, you can see so much granularity with all the daily options and weeklies and Wednesdays, and so if you're looking at the term structure, like November 2nd options on SPX or SPYs. November 2nd, November 4th, November 6th. I mean, you can see it's all the way, through all those. But for people that are really trying to fine tune and play the election like that, I would imagine they're doing, they're going to be using the actual index options and trying to, predict or put on the trade exactly how they want it. VIX futures obviously, takes into account a lot of that, but sometimes it's a little bit different beast, if you will. But I just wanted to mention something Luke was talking a little about the history of the VIX back, so I remember trading pricing up an OTC option before any VIX products were even listed back in, I think it was like 2003 or 4, long time ago. But, we used to do those things back then. But I think, around elections, I think late in October, who knows, there could be announcements of changes in who's running or, who's being VPs and things like that. You just don't know. And I do think a lot of firms are going to want to be, risk off going into elections and going into that time period. I think liquidity is going to, be a challenge for, think about the dealer community, even the market makers. I mean, things are going to widen up. Things are going to become. So my advice always is don't wait till you have to hedge or put your trades on. You might want to think a little bit ahead of time. But it has been a tough carry. I mean, the vol's been pretty elevated, and things are, unless you caught that recent spike, holding on to the long side of vol has been a little bit challenging recently.
Certainly of late, that has been the case. We'll get to all that in a little bit when we get to our ever-eroding friend VXX. But now let's go on out to the land of the option side of the vol space. Spikes options, obviously the future still halted. Not a lot going on. Worth noting, though, the OI has doubled since our last show out there, from a small baseline, obviously. But there is still some interest kicking around out there while they're waiting for the futures to come back out there. Moving on out to VIX options land. Not exactly the most rock'em sock'em robots of days, despite the fact that we're seeing maybe a little bit of intensification on the sell-off. Dow off 1.5% now out there. So things ticking to the dark side. S&P threatening 2% now. So maybe my vol prediction looking a little bit better towards the end of the show here. VIX options, as of a few minutes ago, only 101,000 contracts on the tape. So a pretty quiet day. I have a feeling that's going to change. But for now, at least, a pretty quiet day out there. The ADV also ticking up a wee bit since our last show, up to about 417,000 contracts. Puts it up about 9,000 contracts from last show. So a far cry from the 290-odd thousand it was not too long ago, but hardly an explosion of volume as well. Let's get on out to what the top, the hot, the big open positions are out there in VIX land right now. By the way, listeners, it only cost you 64,000 contracts to break into the top 10 of VIX land right now. So I guess get while the getting's good. Get out there. You too can break into the top 10 with just a handful of contracts in VIX land. Number 10 gets you to the D's. 23 puts. By the way, it looks like it's mostly calls out here. 60-40 calls to puts in our top 10 this week. So read into that what you will. Number 9, 72,000 of the OCK 20 puts. Number 8, 76,000 of the OCK 22 puts. Number 7, 81K of the October 70 calls. Now we're getting some of the fun strikes. Number 6, 87,000 of the Jan 150 calls. I love that one. Number 5, 89,000 of the November 65 calls. Number 4, 99K of the Jan 75 calls. Number 3, 99,000 as well of the Jan 27 calls. In fact, 99,000 as well for number 2 of the Jan 40 calls. You have to go all the way to, I can't remember the last time we've seen this, listeners. You have to go all the way to number 1 to even break 100,000 contracts in VIX. That's how light it is, as SEP has gone the way of the dodo here. OCK 25 puts, 141,000 contracts. That's usually probably maybe even barely enough to break into the top 10. That's good enough today for number 1. Total of about 4.4 million contracts open, about 2.8 million on the calls, and about 1.6 million on the puts. Before I start breaking down some of the day-by-day paper out here, Luke, anything catching your eye out there in the VIX options this week? And also, are VIX options, are those a tool you guys watch and use a lot over there in Equity Armor land?
Yeah, well, I mean, a couple of things. We do use them. We watch them very closely. I do think that the volumes are a little lighter, but, Fridays have tended to be like this. And most Fridays, the VIX, for some reason, has just been coming down, not really correlating to what the market is doing. But I think these option volumes are going to pick up a lot as we get closer to the election. And you're going to have to start treating these options as binary options. Binary meaning it's either in the money or out of the money. I don't know if there's going to be a lot of delta playing by the people who come in there and try to use it as either speculation or a hedge. They just either want to have the protection on, or they're just thinking binary. And remember, when you talk about binary options, you're looking at the premium that you pay for the option, and the volatility doesn't matter. So if it's a week before election and you paid 50,000 vol and you still paid 50 cents, right? It's still only 50 cents. So you start to have to looking at those options more of a binary thing than delta plays or what vol you're buying. And again, I have to agree with Tom. If you need to put some stuff on, do it when you can, not when you have to. So and that's why I don't know why the volumes are down like this. You would think people would start to bleed into some of these options and be buying some of these options now, but who knows?
That's an interesting point about binary options in VIX options land. There certainly is some of that as we're heading into this big, I think we've called it before, an earnings event effectively for the S&P and for the market. That is, of course, the election. So there certainly is some of that binary event risk going into this big event coming up. It seems like for the entirety of the year, the election has loomed as this very distant prospect. And now here it is right in front of us. Oh, how time flies in the midst of a pandemic. Let's get on out to what's lighting it up in today's pretty light paper. Again, only 101,000 contracts on the tape as of a few minutes ago. The most active contracts today are the Oct 25 put with a whopping 7,800 and the October 27 put with about 5,500 and the Oct 32 half call with 5,500. Now, yesterday, a little bit more paper on the tape. Not a ton, but a little bit more. 232,000 contracts on Thursday. The most active contracts were the October 25 put with about 24K on the tape, and the Oct 28 put. Seen a bit of a theme out here in the last few sessions. 17K there, and the DEES 23 put with about almost 14,000, and then the DEES par calls, going all the way up to 100 listeners for 11,300 on Thursday. Wednesday, a little bit more active again, 273,000 contracts on the tape. Number one with the bullet on Wednesday, October 25 put, yet again, 28,000, almost 29,000 on the tape, followed by 20K almost even, 20,001 to be precise, of the DEES 21 puts, and 16,800 of the NOV 35 calls, and about 15,600 of the NOV 47 half. So an interesting strike assortment on Wednesday. Remember, we've had a few days this week where we've kind of vacillated between rallies and sell-offs, and that's probably why we're seeing a diverse strike selection going up out there, which makes it kind of interesting. Tuesday, the most active day of the week, 465,000 contracts on the tape. It's this price action out there and the indices continues. Maybe we'll rival that today. The options volume so far not showing that, at least in VIX land. The most active contract on Tuesday, the NOV 110 calls. Listeners, yes, 110. If the par wasn't optimistic enough for your blood, listeners, well, they got 110s for you out there in NOV. Trading it up to the tune of nearly 41,000 contracts on Tuesday, followed by 37,500 of the SEP 24 puts, 27,000 of the SEP 26 puts, and about 23K of the SEP 25 puts. Obviously, all those bad boys going the way of the dodo here. 21, almost 22,000 as well of the 42 half calls going up on Tuesday. And then Monday, coming back after a truncated trading last week, about 355,000 contracts on the tape on Monday. 26K of the SEP 26 puts leading the dance out there, followed by about 18,000 of the SEP 24 puts and 17,000 of the SEP 25 puts. Got to go all the way down to number 4 to find the first Oct. That was the Oct 23 put with about 16,500 contracts on the tape. Mark, a bit of a weird week out there in VIX land, but of course you can say that pretty much any week during the pandemic this year. Any interesting prints catching your eye this week, including those pretty funky NOV 110? Someone had an axe to grind out there, sir.
Yeah, nothing, no crazy paper that I've seen over the last few days. Those Nove 110s are, aside. Volume's been pretty light. My take on why volume's been so light, even with this kind of worsening sell-off today, is that, we need to get the VIX closer to the October future before we're going to be able to see any real options activity, because right now you're better off using SPX options or than you are using VIX or spikes, because there's such a spread between where the future vols are pricing themselves and where actual options are currently pricing for 30 days to expiration. We're down almost 3% on the 2.5% on the NASDAQ, over 1.5% on the S&P. And the October future is not even budging. The November future is up marginally. The ETPs that we love talking about are up 20 cents, 25 cents. There's zero activity where, other than a direct hedge, where you're getting help from volatility-based products.
I'm getting a little bit of help from the vol-based products right now. They're closing in on my prognostication. Still got a little bit of time to go, but Spikes is threatening a 28 handle now. So we're getting up there. We need about a little more to go for me, but still looking a little bit better. The worm is continuing to turn as we move inexorably towards that portion of the show. Meanwhile, before we get there, though, we got to take a pit stop over there in VXX land. Hope you enjoyed the juicy erosion you've gotten over the past couple of weeks out here, listeners, because VXX has certainly been complying out there. It's down nearly 8 handles over the last couple of weeks out here, and it was down about 2.25 from our last show last week coming into today's show. That has reversed a little bit as this sell-off has exacerbated a bit. It was at about 23.75 to start the show. VXX closing in on 24.5 now, so getting back about 0.75 of a point, probably more as the show will progress. So can't be all erosion all the time, listeners. It's got to get a little bit of that back, and it's getting some of that back today. It's also getting some volume today. Already 250,000 contracts on the tape, so that's interesting. About 2.5 times as much paper going up in VXX as there was in VIX as of a few minutes ago. I'm sure that number has since bounced a bit out there in VIX land. Let's just do a little bit of a catch-up in VIX. VIX still only 118,000 contracts, so still 2+X going up out there in VXX right now, which is a little bit surprising and certainly fascinating out there. The ADV out there is threatening 300K in VIX land right now, or I should say VXX land right now. So VXX is threatening VIX on multiple fronts out here. 298,000, that puts it up about 12,000 from where it was this time last week. The most active contracts out there today, the SEP 23 puts with about 16,500. Followed by the SEP 25 calls, not all puts all the time, with about 15,600, and then about 15,200 the SEP 25 puts, and 13,600 of the SEP 24 puts. Let's break down really quickly what the hot positions are out here in VXX land. Mr. Meatball, if you would be so kind, sir, if you'd like to play I need to get some music for this game, but in the interim, let's just go right into it. What is your prognostication this week, sir, for the Where's Caldo? Where do you think the first call is on our top 10 here in VXX land? Then, if he's not too confused, I'll have Luke play as well. Go for it, Mr. Meatball.
Number 8.
Number 8. Interesting. All right, Luke and Tom, you guys can both play along if you like as well. You probably don't look at the notes for a second because that will reveal the answer. And I'll have you both guess where you think the first call is in our top 10 in VXX. It's a little bit of a game we like to play to gauge sentiment out there in VXX. Obviously, VXX usually pretty put heavy. So where the first call falls in that top 10 from the bottom, at least, is interesting and perhaps worthy of note. So Luke, as our guest, I will give you the dubious honor of going next. What is your guess in order of 1 to 10, sir? Where do you think that first call falls?
No, I think a lot higher. 3.
3. Interesting. So he thinks it's all puts all the time. Tom, round us out here, sir. What is your guess in the 1 to 10 in our newly christened Where's Caldo game, sir?
I was going to go with a 6 number, so I'll go with 6.
All right, 6 it is. So we have an 8, a 6, and a 3. We're kind of dancing all around it. It actually is 7. Number 7 out here is where we find our first call, at least from the bottom listeners, in the top 10 out there in VXX. By the way, about 1.72 million contracts open out there on VXX. Pretty equidistant between calls and puts right now. But number 7 is the SEP 25 calls. That's our first call in the top 10 with about 23,000, followed by number 6, the SEP 24 puts, 24, almost 24,000, about 23,900. Number 5, SEP 27 calls, 26,000 out there. Number 4, also 26,000 of the SEP 35 calls. Number 3, 27,600 of the SEP 30s. Numero dos here, 29,500 of the SEP 20s. And round out the top 10 out here, 30,700 of the SEP 23 puts. Worth noting, our friend out there who likes to do the size puts and put spreads has not come back to play. Maybe he's regretting that given how much erosion we have seen over the course of the past couple of weeks in VXX. I do believe we have a listener question about that, so we'll get to that more in a little bit. Luke, is this a product category you guys watch out there at Equity Armor, the ever-eroding, ever-vanishing VXX, sir? And if so, what caught your eye out there this week?
Yeah, we watch it. I mean, minute by minute, we have our own mutual fund that has a constant hedge on it, and we use our own proprietary vol hedge. And to trade around it, we use VXX and other products that you talk about. So we always have ongoing positions in there or in some of our other portfolios. And I mean, it's been surprising how well VXX has done this year, but over the long term, I mean, it is a decaying product like any other insurance product is, right? So if you look at it unsplit adjusted from the time it started until now, it's, it's a line of my social life. It's just straight down. But you do get these spikes that can catch you in years that VXX has pretty good performance. So we try to capture some of that using VXX and VXX options and some of the other products. But I'm a little surprised by the call volume because I would have thought as all the money's coming out of mutual funds and ETFs in the short term, mostly from retail, that they'd be putting on some protection, and usually they either do that by buying it or buying some calls. So I am a little surprised.
I think everyone's social life has taken a bit of a downturn since March there, Luke. So don't feel too badly about that. Not a lot of heading out and socializing these days. This is about it. All these virtual socializing is the new norm here, Luke. But you're right. VXX, I do believe it is the greatest value destruction, product in recorded history, something along those lines. Since inception, it's lost 99.9% of its value over time. So kind of hard to compete with that from a long-term perspective out here. Mr. Meatball, I know you're crazies in the pit chat and the trading legion and all that fun stuff. They love themselves a little bit of VXX, particularly when it plays ball like it has, maybe surprisingly, over the past couple of weeks. What's catching your eye out there in VXX land this week, sir?
Yeah, again, it's how lazy it's been. It's unbelievable. I've never seen any the market. I mean, I guess I have, but this just shows you how I think overbaked the market was. It is. It was pretty darn nuts over the last few days and weeks, and vol rallied when we were rallying, and now vol's doing nothing as we sell off. It's unique, I'll say that.
You know who isn't nuts though? It's our audience. So we're coming up against it. So without further ado, let's get some of you guys on with a little bit of your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol Voicemail, the portion of the show where you guys take the reins, your questions, your comments. Let's kick things off. These are trying times. Let's kick it off with a little bit of love, just to warm the old cockles here. This is a 5-star review from Mackenzie. I don't have here which platform this is from, but again, we're on pretty much all the platforms out there these days. So one of those ones out there. Mackenzie wants to say, best vol program on the dial. These guys know their stuff. Yeah, I like this. They are the OGs of volatility, ! What are you waiting for? Subscribe. Well, thank you for that, Mackenzie. Yeah, we are kind of the OGs of vol, or at least when it comes to the vol programming front. We kind of kicked this space off. As far as I know, I mean, we might be the best. I'm pretty sure we're kind of the only still. I don't think anyone else is really playing in this space out there right now. Maybe a few people talk about VIX every now and then, but that's certainly not the focus of everything that they do. So, yeah, thank you very much, Mackenzie, and everyone else out there who's taken the time to go wherever you get this program, Spotify, iHeartRadio, Last.fm, Podbean. A lot of you coming from Podbean these days. YouTube, Apple Podcasts, Google Pod, all those places, the app stores where you get our app. Wherever you get our content, keep those reviews coming like Mackenzie here. We do love to see them. A, and B, it helps new folks continue to discover our programming. There's been a huge, massive influx of people ever since the COVID-19 pandemic broke. We like to be a reliable source of information for people out there. So if you like what you hear, keep those reviews coming. So new folks who may be confused, could be concerned about volatility, could find their way to the program. More important than ever these days out there. So thank you, Mackenzie. Next up, Tom, this one's right up your alley. This comes from Vels. Vels wants a bit of an update. She wants, or maybe he, what's going on with the Spikes futures? Why were they taken off the market? And B, are they coming back? The latter one's probably a more difficult question to answer, Tom, but maybe you can kind of provide a little bit of light. We touched on this before. There's a bit of a regulatory kerfuffle going on over there over who should have oversight of the Spikes futures. Is that effectively, am I misconstruing that, Tom, or is that a pretty accurate?
I will leave it at that as far as the description of what happened. But progress is still being made. With the commission, and I know they're having great conversations with the MIAX management. I'm not in those conversations, but hopefully we get this puppy up and running pretty soon.
Yeah, from everything I know there, Vels, it was a bit of a turf war between, who oversees different types of indices, whether it's the CFTC or the SEC. And apparently they couldn't really agree over who should have regulation over a broad-based index. And the MIAX folks, they didn't really have to delist it. Out of an abundance of caution, they did. And so now they're waiting to get, I think, for those two regulators to have a meeting of the minds over who should oversee what. And that's effectively, I do believe, what we're waiting for out there. So hopefully, I mean, obviously, these are difficult times to get anything done in D.C. right now. There's a lot of other priorities on the table, but hopefully that'll stop gumming up the works soon and we can get VIX future, I should say Spikes futures back here on the dock. Here's an interesting one from Static. Static wants to know, isn't it strange that VXX came in so dramatically given what we were looking at in the VIX futures heading into election day? That is interesting. We were talking about not too long ago on the show, listeners, that, it seemed like there was a pretty healthy bump heading into the VIX futures. It didn't seem like there was going to be a lot of juice maybe coming off the table in the near term in VXX, but we have seen quite a bit get squeezed out. Like I mentioned right before the show, it's less now, obviously, as vol is starting to creep back in. But before the show, it had come off almost 8 handles in the past couple of weeks. That's a lot of juice to get squeezed out of VXX. Luke, sounds like you guys follow VXX pretty closely over there. Do you agree with Static here that it's strange that VXX eroded as much as it did over the past couple of weeks, or is that what you guys were expecting?
Well, it's I wouldn't say that about VXX. It's strange how high October VIX futures got and how they came back down, and it traded almost as high as 40 a couple of weeks ago. So if you look at the term structure of VXX, it's open to everybody, as in what they do and how they do it, because it's an ETF, and that's how the market makers know what their positions in VXX are going to be. That's a simplified way of putting it, but they've got to roll out of the front month into the second month into whatever they're doing in a systematic way, and the price that VXX is at is got to do with the type of VIX futures that they're holding, and obviously VIX futures, the prices have come down, so the VXX value is going to come down. And then as far as supply and demand, again, supply and demand has gone down a little bit, or rather demand has gone down, so prices have come down. But it isn't strange how it's behaved if you look at it in terms of what VIX futures have been doing, which is really how you should look at VXX.
Yeah, certainly when you look at it through that lens, obviously the VIX futures were looking juicy, but they did give up some of the ghost, and that certainly can contribute to a little bit of erosion. Mr. Meatball, same question for you, sir. Do you agree with Static or that it's weird out there that VXX has come in this much, or do you agree with Luke that maybe not so weird, sir?
Yeah, I think that if you take into context that vol rallied as we were going up, that it needs to come off as we're coming down. Why? People are taking off winners. That's what people do when they win trades. They pocket the P&L. And, call buying is waned as markets have come off, and call buying in SPY and the Qs and all those names was a big driver of the rally and volatility. And so there you have it.
There you have it indeed. We'll have to leave it there for your questions, listeners, because it is time for that most difficult, most dangerous portion of the show. Yes, it is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the portion of the show where we break down what the heck is cooking, what is popping off out here, and what we expect to pop off in the coming weeks. And it seems like the sell-off has mitigated a little bit, so that's not exactly working in my favor now. The NASDAQ off about 1.75%, the S&P off less than 1.5%, about 1.4%, and the Dow getting a little bit juicy though, off about 1.15% out there, but not enough to keep juicing my vol. So now I have officially announced the extension of volatility views for another couple of hours until the vol can move my way. Because coming into the latter portion of the show here, we're seeing spikes was threatening the 28 handle not too long ago, now giving some of that back, 27.38. Dare I say it, looking pretty close to where the meatball was last week. VIX cash, similar levels, a little bit north of that, about 27.65 or so out there. I was at about 29 double, which was a little bit north of where we were this time last week. So I thought we'd sell off a little bit and then come back up. And we were seeing some threatening of that, but not today. And of course, Mr. Meatball's at 27.27, which Mr. Meatball, at least in the spikes lens, looks pretty good. You're almost within a bullseye. You're 0.11 away. Our bullseye is 0.1. But hey, in these trying times, I'll give it to you. How about that, sir? You get a bullseye today.
I'm looking at a VIX that just printed 27.21.
I was looking at spikes. I can pull up a VIX. Okay, I'll give it to you.
I'm feeling, and spikes, yeah, we're right there with spikes too. So I'm feeling pretty confident about myself. I'll let everybody else go first, and I'll go back.
All right, you get to choose then. Who goes first?
All right, let's go with TJ.
All right, Tom, you know the drill. What are you feeling this time next week for spikes and VIX, sir?
Well, for spikes, I think we come a little bit off this level. I'm going to go to 26.32.
I like it. I like the precision. 26.32 out there for Mr. JARCK. All right, Mr. Meatball, I'll let you choose who goes next, given the rarity of your bullseye, sir.
All right, well, I'm going to say not you.
Gee, thanks. Okay, so I guess that means, Luke, you get the dubious honor of going second. What are you feeling for where VIX and or spikes will be at this time, the end of the show, not the end of the day, the end of the show this time next week, Luke?
I'm going to go with spikes as an homage to Tom here, and I'm going to say that it's going to be about 27.
Interesting. So we're starting to line up here around a level out here. Well, Mr. Meatball, I guess that means by default I shall go next, and you could do your little victory lap at the end there and try to cart me by about a nickel or so like you like to do. So yeah, we got Tom at 26.32, Luke at a 27 even. We're at about a 27.32 right now in Spikes land out there, listeners, to wrap up the show. You know, I've been leaning a little bit north of where we have been for a couple of weeks, and we have flirted with them intra-week, but not when it counts at the end of the week. That's the rub here in volatility land. So coming into today's show, I'm going to say, this is what going third is hard because he already camped out on some spots that I kind of like. So I'm going to say here, but a little bit north. I'm going to say a couple of points below where I was this time last week. I'm going to say 27 double, so 27.55. So we're going to get some erosion as we usually do. And then it's going to kick up again, maybe even during showtime next week. And we'll get a nice march right up to the 27 double strike. And I shall celebrate my bullseye accordingly. All right, Mr. Meatball, I have bought you enough time, sir. What are you feeling for this time next week?
I'm going way below everybody. Way below.
Go for it.
I'm going to go 24.
You're just a big fan of Kiefer Sutherland. You can say it out here on the show. I get it.
I am.
I had a feeling you were going to go for
Chloe,
24
where are you, Chloe?
Yeah, the PDA. Remember the magical PDA before his smartphones, and he could do everything in the world with his little PDA. Ah, how the world has changed since the heydays, the halcyon days of 24. So there you go, listeners. There's our marker of this week. 24 on the dark side. I had a feeling it was going into 24 handle this week. And then Tom is the next darkest at 26.32. Luke at a 27 even, and I'm at about a 27 double out there. That's your vol market for next week. Unfortunately, that music means we've come to the end of another epic journey through the world of volatility. Hopefully you like what you heard out there. We talked spikes, we talked VIX, we talked the futures, talked the options, talked VXX, talked a lot of the old term structure, the erosion, all the good juice there, and a lot of fun stuff. Even a little bit, actually didn't get the UVXY, not a lot of time for it today, but a lot of other products in the mix there as well. When the earnings start kicking back off, we'll get into those again as well. But before we go, let's go back around the horn. Let's start with our guest, Luke. You did an admirable job here holding down one half of the hot seat out here this week. So if folks are intrigued, they want to learn more about what you guys do over there at Equity Armor, where should they go? What should they do?
They should just go to our website, Equity Armor Investments, and from the website, they can see some of the strategies we have and how to get in touch with us.
I'd imagine with a name like Equity Armor, a few folks might be interested in a little bit of hedging activity these days. Is that the case there, Luke?
Yeah, it is. It has been, and maybe in another show we can talk about people overseas hedging their risk with options and VIX and spikes, et cetera, in the U.S. and the correlations between that, which we've been talking to some people about.
Interesting. Look at there. Luke, smart man, already setting up a return appearance for himself. See, he's thinking ahead there, listeners. Checking him out over there at Equity Armor Investments online over there. And Mr. Meatball, same question for you, sir. If folks want to join the trading legion, the pit chat, all the fun stuff you guys have cooking over there in the land of the pit, where should they go? What should they do?
Go to optionpit.com and come visit us. We write blog posts almost every day. We put all kinds of great content. Just come to OptionPit, give us your email so that you can get it first.
Give them your email, your social, your cell number, all that good stuff. And then they'll hit you up a lot of. I'm just kidding. OptionPit.com, of course, the place to go. Sign up for their email. You get all sorts of interesting stuff going on out there. Check out the blog as well. And check out some of their classes and webinars and all the other fun things they have cooking over there. The memberships tab. You can see it all for yourself. And last but not least, sir, Mr. Tom, if folks have questions like our listeners did about spikes futures, about anything going on with spikes, or maybe they want to learn more about all things MIAX, where should they go? What should they do, Tom?
For all spikes related and all MIAX related, you can just go to miaxoptions.com/spikes. You'll find a lot of resources there. You can also reach out to me directly if you want, or anybody else on the MIAX team. Thank you.
There you go. You know where to go, listeners. The mothership, miaxoptions.com/spikes. Or just type MIAX and spikes into your browser. It'll take you there. What do you find there? Well, of course, some great data going back. You want to see some data on all things spikes? It's all there. A snazzy little video explaining what the heck spikes is in a couple of minutes. Press releases. You want to know when the futures are coming. It's all there, as well as a link to a cool little show called Volatility Views, which I'm guessing you might like. So a lot of fun stuff to be found over there. miaxoptions.com/spikes is the place to go to begin your journey. And on behalf of Tom and the greasiest of meatballs and Luke and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in such great questions. Keep them coming, for reviewing us on all of your favorite platforms. Keep that coming as well. And we'll see you back here on Monday for the old option block, kicking it all off all the way through again till Friday in another episode of Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.